We are live. Welcome to, I think this is the third episode of Conversion Academy. And we got Cody Adams back here. Probably one of the higher the higher intellect kind of guys. I just love having these conversations with you. So we brought him back. Good. You're probably going to be seeing him a lot. Just he has so much knowledge to give. So Cody, appreciate you coming back, bro.
Yeah, man, it's good. I mean, obviously we got the studio. The studio's popping. I got some stuff that I'm doing in here. You got some other stuff. It's fun to create. It's fun to build. That's what we're meant to do. We're meant to create, build, and achieve. And hopefully we're providing values to your partners and the people that come in, and value to your partners and folks that listen in. That's what it's all about, man. Is just to give people the playbook, and then again, you heard me say it before. Give people the playbook, and you're still going to beat them with it. But we're finally live, which is sweet from the last time that we chatted.
That's right.
It's been 3 weeks, so of actually live being on the telephone. Originated a few mortgages, which is sweet. So they're in the pipeline. Got 2 loan officers that are finally popping on. We should have 10 by the end of the year as a projection, so that's exciting. But yeah, man, it's good to be back. Good to be back talking sales. I left here the last time feeling on fire. I don't know what it is, man. Every time, if I get on a roll talking about sales, I could talk about politics. I could talk about all this other stuff.
Yeah.
But talking sales with you the last time we were here, I left on fire.
Yeah, and I learned a lot from that too. Like, especially, when I'm having conversations with our clients, I always talk about the infinite game.
Yeah, baby.
Of home purchase business, which is what we've been doing. I was literally just talking about this with Robbie last week, but essentially what's been happening let's talk about what's been happening in the mortgage industry,
please.
right?
Yeah, we might as well.
Rocket laid off 2,000 people. JP Morgan laid off 2,000 people. Yeah. Wells Fargo laid off 2,000 people. Like, there is a huge, huge, huge problem right now. People are losing their jobs. And a big part of that is because the past 2 years, everybody's been focused on refinance, right? So 2 years later, they don't have anything in their pipeline because they were ignoring home purchase business.
Yeah.
So, we're in a position right now where, and I talked about this before, like all of our competition was pretty much catering to refinance. And we've been strictly focusing on home purchase the past 2 years.
Smart.
So we have such a leg up on these other guys who are just now trying to become, all home purchase.
Get in the digital media marketing space.
Right.
I was thinking about that actually on my drive in. I was literally thinking about what we're going to talk about and so on and so forth. And I was thinking about how you do have a leg up on your competition because you've been in the purchase game for so long. I mean, your whole business is based off that. And now that's where the business is driving to. The biggest contributor, and people don't understand it, just a few thoughts on the marketplace. Like, the biggest contributor to the GDP or the gross domestic product of our nation, the value add is 4.5, 4.6 is real estate, finance, and insurance.
Right.
So what people need to understand is the market's not higher, it's just normalized. We've been in a unique normal market for the last 2 years.
Right.
It is not higher. It is not different. It's just unique because you have perspective of what's happened with interest rates over the last 2 years. When the Fed rate's at 0, the mortgage companies to stay competitive are only throwing their rates at 2.25, 2.5, 2.99 because that's their margin anyways. When the Fed raises their interest rate, they just are adding that interest rate, the money that the lenders are borrowing. They're just adding that interest rate plus their margin plus any sort of inflation. So you're just seeing a normalized marketplace, which is good. The purchase market's always going to be there. I think, in my opinion, this is just some market thoughts. The interest rates can't go above a certain point. And the reason why they can't go above a certain point, I think that's probably about 7%. People say that it's going to go to 10 and 12 and all this other shit. It's not true. Because the average home price or the average loan amount is so high that it can't go that high because other people won't be able to actually afford a home.
Right.
So in 1980, when rates were at 10%, you hear about all these war stories. The average home loan was $88,000. Now it's $250,000. So at 10%, you can't afford a $250,000 house. I can't.
Right.
Most people can't. at 88,000 you can, right? So the home loan size has grown, and I don't think it can go over. You're probably going to see a pullback with inside of home values. You know, real
Right.
talk, like people have this unrealized gain.
I'm thinking about selling for that reason. We got our house for a little over $500,000,
Yeah.
and now the value on Zillow, at least, is $860,000, which is like nuts.
Yeah, so you've seen 20, 30, 50, 60% increase in values, which is
Right.
great. It's awesome. It's good to see. However, people don't understand that you can't make that a realized gain until you make it a realized gain. There's only two ways that you can access your equity. It's doing a cash out refi or HELOC, right? Or you sell the home.
Right.
You can't go grab a shingle and pay for a gallon of milk.
Right.
You see what I'm saying?
Uh-huh.
So people need to understand that. And I think people think that they're house rich or maybe that their net worth has grown. And the reality is they can wake up tomorrow and that shit will be gone. And I think you're gonna see a pullback of 20%. I really do. I think you're gonna see that, which is gonna soften the market. There's gonna be more supply from a home. Like if you look at statistics over in 2021, so 2018 in Maricopa County, which is the biggest county in the U.S. I don't know if you knew that. Biggest county in the U.S., Maricopa County. It's just, they literally, Arizona,
I didn't know that.
there's like, this whole thing's a county. It's crazy. Maricopa's huge. Anyways, the average inventory for homes for sale with a pool, which, dude, it's 105 degrees outside.
Yeah,
right
everybody
now.
needs a pool.
Yeah. Was 3,500 on any given day. In 2021, the average inventory of homes for sale in Maricopa County with a pool, 189.
Wow.
So the demand was super high, and obviously the supply or the inventory was super low. And I think with the rates going up, you're going to see people like yourself that probably want to start selling their home because they realize it's the apex of the market, and they're going to try and get out of it, or they're going to try to do something with their house. You're going to see people say, "Hey, shit, I'm actually going to sell my house," and you're going to have more inventory. So that's really interesting. To the layoffs, just some thoughts. These big companies wanted asses in seats.
Right. Yep.
That's it. I worked for one of them. I mean, it's pretty simple. The quality of human that was being hired by all these companies was, how do I put this nicely? Dog shit. I'm just kidding. No, look, I mean that. Well, you literally just had to have a pulse and could do simple math.
Right.
I'm serious, right? And the reality is you're going to see a lot of folks get out of the mortgage industry.
Yep. That's happening everywhere.
Right. You're going to see them, whether it's forced or by choice. And you're going to see the real dogs of the industry come out and gain
Right.
market share. And that's the neat thing. If you're good at sales, which is why we're here, if you're good at sales, you believe that sales in the mortgage industry is your identity. This is who you are. This is my career. You're going to benefit and prosper from it. Because look, if this whole thing goes down, Alex, the whole country goes down. Again, the biggest contributor to the GDP is finance and real estate.
Right. And the conversations that we're having now with prospects,
Sure.
right? People who are looking at us and thinking about buying our service, the conversation has completely changed from 2 years ago. 2 years ago, it was, I don't know if I want to buy. We don't know what this COVID thing is.
Mm-hmm.
Right. There was so much uncertainty, right? And I would have to kind of walk people through that. Well, hey, listen, if you really think that a recession is coming, then
2 years ago.
yeah, then you sitting on your hands and doing nothing is going to inevitably make you a victim of that recession, right? You have to actually take action.
Correct.
And you have to invest in yourself. So that was the conversation 2 years ago. Now the conversation is the market's crazy, right? And home purchase is, I need money now, right? Because their pipelines are dried up, right? Refinance pipelines, a week. They last about a week or two. Home purchase, 3 to 6 months, right?
Yeah.
And it's like they want money right now. It's like, well, the only avenue there is right now in the industry is home purchase business.
Correct.
So like not only do you have to buy,
Yeah.
not only do you have to buy now, but like you might not see the fruits of it for a few months.
Yeah. I mean, we talked about that last time. It's a long game. I think that, and just being candid, I think that, I mean, all loans that I've written this month or that we've written this month has been actually refi.
Wow. People are
I think it's
no way. People are refinancing right
dude,
now.
what you got to understand is that no matter what, the American people, I mean this with all due respect, they don't understand how to balance their checkbook. They don't understand how to get ahead in life. The average person is living paycheck to paycheck and less than $1,000 in savings. So what do? They leverage credit cards. What are credit card interest rates? You got to realize when the Fed raises their interest rate, they're not just raising interest rate on mortgages. What else are they raising interest rates on?
Right.
Personal loans, credit cards. And when when that rate increases, that other rate increases. So you have folks with $30, $40, $50, $60, $70,000. I literally just had one $110,000. We consolidated everything into their home. You have equity positions at an all-time high. You have people being stupid with their money and financing everything to the till on credit cards. You're always going to have real refi business. You're always going to have it. And that's the beautiful thing is the shitty part is as loan originators, mortgage guys and gals, you're betting on the American people to continue to be stupid with their money on the refi game. And it's always going to happen. So you'll always have
just not as much.
It's not as much. It was 90-10. I mean, it was not 90-10, but it was like, that's the business we were cranking out because it's fast money right now. Let's get after it. Let's help these people out. We'll close this loan in 2 weeks. And the purchase game, it's like, I don't really want to deal with that, right? There's people that did. But anyways, you're always going to have folks that, like our business, probably 70-30%, but even these loans, 70% purchase, 30% refi. But you're always going to have that. But look, I think for the folks that are saying there was a recession 2 years ago, your clients, and now they need business right now. I need give me appointments right now. Come on, help me out. I don't understand the mortgage industry or just professionals in general and their scarcity mindsets. There's always going to be an excuse not to buy.
Of course.
Leads. There's always going to be an excuse not to spend money on X. I told you 2 minutes ago, I just signed a lease for our mortgage company. We could easily be at home.
I tell our sales guys too, I say, listen, your job is not to convince them to buy. Mm-hmm. Your job is to help them make a decision. There's a difference.
Good point.
Right?
Yeah.
It's not necessarily to convince them to buy. They already want to buy. That's why they're on a call with us. Your job is to justify the decision, right?
Yeah, people buy an emotion, justify on costs, or justify on value, really, right? So if you can provide them value, hey, this is the projection. This is how many appointments I'm going to give you. It's the same thing what we do, man. We say the same thing. Yeah. You want that low interest rate at 4.25%, which is a low interest rate right now as it sits in 2022. You're going to pay $18,000 in closing costs. Now, again, that's rolled into your mortgage on the refi, obviously, or whatever the case is. You're bringing it to the closing on purchase. But yeah, that's what you're going to do. So they're literally buying the rate, but they have to justify the cost, and then vice versa, right?
Right.
So that's a really actually good point to make. As a loan originator, you literally have to make a decision. You can either be the person, because marketing in general, the general marketing that's out there, whether it be on a news station or social media, they show interest rates. So people know generally what interest rates are, right? So you have to make a decision. Are you going to sell rate and justify costs? Or are you going to sell the cost being close to free and justify the interest rate being high? Because if you look at it, every single person, contrary to popular belief, qualifies for a range of interest rates, okay? On a purchase, refi, doesn't matter. The lowest rate being, let's say right now, a 3.99, the highest rate being a 6.99. The lower you go on that scale, the more expensive a loan is, and then vice versa. So I can give you a 6.99 for free, but that's like going to prom with the ugly girl. What are you going to do? You have a 6.99, sick, right? So you're paying for it later rather than leveraging a little bit up front. So you're paying now or paying later. Does that make sense?
Yeah, 100%.
Or you can get a 3.99 for $33,000 in cost. Your payment's going to be lower at the 3.99 than the 6.99. Again, these are kind of hyperbole in big areas of the teeter-totter, so to speak.
Right.
But it is like a teeter-totter. So mortgage loan originators have to make that choice. Which one are you going to sell? Or are you going to try and find a sweet spot? The other thing that's really important is educating your client on that.
Right.
I can't tell you how many times I've talked to clients and they're like, what's the rate? And you're like, it's a 4.25%. Well, this person's giving me this, and Bank of America's rates this. That's not the case. You qualify for it all, sweetheart. You just simply haven't been educated enough from your loan originator, which it's your fault. You haven't been educated enough to understand the difference and that you qualify for everything and what the best solution is for you and your family, what the best ROI is for you and your family. So, anyways, just a couple thoughts on the marketplace and kind of where it's at. But look, if you give your clients that education, you're candid with them, and you show them a couple different options on that rate scale, they love you for life, man, and they stop shopping you. Like your loan originators that buy from me, they got to understand that they should show them a couple different options,
right,
based off that sliding rate scale.
Well, because and then you're obviously showing that you have their best interests at heart. What are your thoughts on?
Dude, that's just to kind of keynote on that. The 2 clients that I just wrote, one client was getting blown up. You know how our industry is.
Yep.
And they literally put their information online. There's 100,000 phone calls.
Yep.
So one thing that I like to do is I like to literally provide as much value as I possibly can to the client. And this client literally pulled credit with a couple other lenders. Very well qualified client. Her name's Maxine. And VA loan. They pull some cash out, do some debts. They want to go to this. It's a long story, but they want to go back to Jerusalem, and it's a church trip, and they want to do this and this and all this other stuff. And I found out really what their why was.
Right. That's
and
important.
She goes, hey, just so you're aware, I'm done talking to anybody else. I truly feel like I have you have my best interests at heart. And it like lit me up, dude. I get goosebumps because that's what it's all about. So anyway, it's just a quick story about that.
You're absolutely 100% right.
Yeah.
And I tell our guys, try and find the why.
Yeah.
Right. I don't get on sales calls anymore. But I used to. And you will actually have a lot of really like touching conversations with people when you find out their why.
Yeah.
And when you're building that relationship, it's building rapport. And, people will tell you their why. Like they're not, you know what I mean?
Yeah.
You just have to ask.
Yeah, you got to ask. And I think it's all about asking open-ended questions. And you got to understand that digging deep is an all the time thing as a loan originator or as a salesperson.
Right, not just sometimes.
Dude,
don't take any plays off.
An all the time thing. And you're not going to go, I say this all the time, but like when you're digging deep on a client's goals or their why, when the why is strong, the how becomes a lot easier. So when you understand their why, it becomes very easy to show them how to get there. And one thing that I've always told my loan officers or whatever the case is having that first initial like feeler call or finding call or discovery call is what folks call them, or whatever the case is, and getting to know your client, so to speak, what their goals are, what house they want, or for you guys, what goals the broker has, or whatever the case is. You can't just ask them once what their goals are and expect them to give you exactly what they are. It's like dating a girl or dating a guy, whatever it is. Right. You don't go on a first date and say like, what are the keys to the castle so I can get you in bed or like marry you or whatever the case is.
Take me out to eat
like
first.
They're going to laugh at you, right? Like that's not going to happen on a first date. But over time and over a good conversation, even if it is the first date, I'm just kidding, but it takes a little bit of time. You see what I'm saying? So it's just, you're not going to just get all the answers to the test the first question. So I always say digging deep's an all the time thing. Find out their why. But
no, you're absolutely right about that. And I think that's just the same across the board. No matter what industry it is.
Correct.
Right? No matter what industry it is, finding out the why is very, very important. How are you guys, what systems are you guys using for your follow-up?
That's a good question. So you mean like drip campaigns and stuff like that?
Yeah. Have you guys even dabbled into that? Or?
Yeah. I mean, we've partnered up with, Lead Mailbox. We're with Arrive. So a couple different CRMs that we're leveraging. I'm familiar with Arrive. And then, honestly, good old fashioned moxie and grit of a loan officer.
Yeah.
You know what I mean? It's not rocket science. You don't have to have some sexy technology. Now look, large scale, do you need that? Probably.
Right.
But when it's just us 3 or us 5 or us 10, and that's my whole vision for my brokerage is an elite boutique brokerage. I'm not going to have more than 25 people.
Right.
Because we want to pay people the most and we want to have a culture that's second to none. We want to have the best place to come and work in America. Now, I'm talking about all industries. Anyways, you follow up yourself. You shoot text messages. You remember to call clients. The old pen and paper isn't a bad look.
Right. And we try and take that off of our clients' plate.
Yeah.
With follow up and like, hey, we'll do it for you. But the really, really good ones, they do it too.
Yeah.
Like themselves.
Correct.
They'll send a text or an email, whatever it is. Personal touch is important. And automation could only go so far.
Dude, you have no idea, man. I mean, you can send out these text messages or whatever the case is when you get a lead, or when you're following up with someone, like these canned responses. It is so important to make it personal. Add their first name.
Right.
Literally,
which is what we do for sure.
One of our first text messages, like, hey, I'm sure you're getting inundated with phone calls. You just place your information online for a purchase or refi. If you want to get things done the right way, the first time, no hair pulling out, you'll call me. Here's my cell phone. You can reach me 7 days a week. That's a lot different than, hey, would you like to refi or whatever it is, you know? So that really helps. I mean, I literally just got off. I think another thing that loan officers miss out on, and just salespeople in general, is answer your fucking phone, man. Like, if someone's calling, just answer.
Right.
I was in the mall. I just came from this office is very swanky and nice, by the way.
Thank you.
And it's right in the heart of Old Town Scottsdale. It's a very, very affluent place. Anyways, right next to Fashion Square. So I had to go return something, and a client called. And they were logging in to sign their documentation so we can get this loan process started.
Right.
I just answered. I was at the damn counter at Allo.
Don't check out at 4 p.m. when, you know what I mean? That's what a lot of loan officers do, though. Seriously.
They check out, man.
They'll check out. They'll go to the bar, have a stiff cocktail. Their day's over, right? Mm-hmm. Somebody calls them. They ignore it to try and call them back the next day.
Yeah.
That person's not as excited. People lose the impulse to buy over time. Time is your worst enemy.
Yeah. And if you're not available or not going to answer, someone else will.
100%.
And that's the thing. Like in the refi game, they're going to refi. It's just a matter of with you or someone else. In the purchase game, they want somebody that they can trust and it's going to answer. You know what's funny about that too is I've had a lot of realtor phone calls lately. Yeah. Because when you're growing a brand, you want to obviously get your foot in the door in different places. And we have a unique approach where, you know, we're all value add. And if they want to reciprocate, they can. So we're looking for 2, 3, 4, 5 different people in each major city or metro city based off the states we're in. And we're literally calling them and letting them know, like, hey, we are pre-approving people and we need badasses that we can send them to that know the area. Tell me a little bit about your story. Tell me a little bit about the clients that you want to these real estate agents, and they really appreciate it. And what I found is I asked, what are you looking for in a lender or whatever the case is? And 2 things that I found that was astonishing that I had a completely different assumption and a preconceived notion of the industry that I had no idea. One is that I thought that every real estate agent had a badass lender they're working with or a go-to. The reality is they don't.
Right.
The reality is they don't. And that's crazy because you would think on the outside looking in, not being in the broker world or really in the purchase world in general, most of my business was refi. That they had that type of relationship and they were sending them people and so on and so forth. And it was a reciprocation process, not the case. 1, 2, those that did have real estate agents, or I'm sorry, lenders, real estate agents that had lenders, they said they're dog shit and they're terrible. And I was like, no way.
I hear that a lot.
They're not available, which to my point, answer your call, answer your phone. They aren't dogs, whether it be a female or male, doesn't matter. Meaning they're not going to answer a call at 9 o'clock at night to get a pre-approval because this client really likes this house.
Right.
And if you're loan officers that watch this, hopefully they do. If you want to separate yourself in an opportunity or at a time where you can separate yourself mightily because the ground is shrinking behind these big companies and behind these people that really aren't in the game for the right reasons, all you have to do is be that person for that real estate agent or feel that for that real estate brokerage or feel that real estate company, whatever it is, that answers their phone at 8 o'clock at night on a Friday to get a pre-approval out so that client can go shop on Saturday.
Yep.
Just be available.
Yep.
Be available and be hungry, and you literally can gain market share and you'll crush this unique market.
Yeah. And no, listen, I've obviously, I've been speaking to a realtor, Buck, Buck's wife, and like they said the same thing. They're like, we just, we have maybe like one lender who's good, right? The rest of them, they're just slow. When I told them I wanted to refer them lenders, they're like, well, are they any good? Like, are they any good? How quickly can they get things done? Like, that's what they want.
Right. They want fast communication and they want somebody that's going to be available.
And when you're building these relationships with realtors, they also want to know that you are experienced. Mm-hmm. Like, you're able to overcome the mundane objections that you're going to get, right? Like, objection handling, I think, is so important. And I think that's where a lot of LOs struggle. They don't know how to combat the objections, right? And there's a difference. There's obstacles and then there's objections.
There's questions and objections.
Right. And you have to be able to distinguish between the two of them, right? You got to be able to, you got to be able to essentially recognize the difference, right? Recognize the difference between what is an obstacle and what is an objection. And a lot of people and a lot of LOs, they kind of freeze up, like they don't know what to say.
I think a couple things. I mean, one, you got to be prepared. So I think two things. One, in a perfect world, and I'm going to talk about this, you isolate the objections so you never get them. Right. And there's really only 3 or 4. We'll go through that. That's number one. And typically, like, that's how I run my business. I always say there's 2 different bankers. There's 2 different LOs. There's a banker that half-asses the first phone call, that doesn't isolate objections, that doesn't brand themselves, that doesn't provide any value, doesn't connect with the client, pitches them a loan option or whatever the case is, gets them pre-approved, whatever it might be. There's no connection. You didn't do any of those things, so you half-ass it. And you're the person standing on top of a desk trying to overcome 15 different objections just to close a loan. That sale is never, ever, ever going to be cemented. They're always going to be looking on the other side of the fence. They're always going to be continually to shop you. It is what it is. Or you roll out the red carpet. You connect.
Right.
You dig super deep. You actively listen. You isolate any objections and spouse, shop, wait, think, whatever it might be, pray. You isolate those things. And then when you present, it's a complete formality. And the client goes, yeah, let's go ahead and move.
That's a really good point. No is a formality. When you go into
where your job starts.
Exactly. When you go into a sale, you need to expect no's. It's just part of it.
Right.
Right?
Yes. So if you roll out the red carpet, you're banker B. I literally coined this banker B mentality. Banker A is you half-ass it. You're standing on a desk. You're overcoming objections. Banker B, you want to be like banker B. Banker B mentality. You roll the red carpet, you isolate. And when you present a loan option, you don't even have to close and say, what's the next steps? And you're like, oh, this is super easy. But you got to get to that point and you have to roll out the red carpet and so on and so forth. So I think that's important. But if you do have objections, you should expect them, like you said, and you should be prepared with some sort of rebuttal. Like always be prepared. Be prepared for a wait or a think, which is the same in my bucket. There's like 3 buckets. There's wait, think. Okay, when you're presenting a loan option, I'm not talking about initial objections.
Explain to our audience what wait, think is.
So a client would say, well, like, look, I appreciate it. I'm just a little nervous on the marketplace. I think I'm going to wait to get pre-approved or to move forward on this refi cash out. Or, hey, I want a night to sleep on it. I need to think about it.
Right.
That would be like a wait or a think, right? So that's like one bucket of objections. And if you're a pro, you have how to handle that objection like the back of your hand. You don't come to the game ill-prepared. We talked about this last time. You know exactly. Client says, I want to wait. You're like, wait for it. Overcome the objection because you have that play stored inside of your mind. Then there's shopping. Like client's going to say, look, I appreciate it, Alex, but ultimately I heard that Loan Depot has better interest rates than you do. Or Loan Depot's advertising a 3.75. Why are you at 4.5? I think I'm going to continue to shop. Clients are very, very upfront that they want to shop or they're going to. So that would be your second bucket is you're not providing enough value, so they want to find somewhere else that will. And then your last is other person. And what I mean by that is you've heard spouse before, but in the game, you don't just get spouse. You know this. You get, I want to talk to my financial advisor. I want to talk to my business partner. I want to talk to my brother, my mom, my dad, my cat, my pastor. Like it's crazy, right? Like, okay, so I just bucket that as other person. So there's wait, think, shop, and other person. And look, there's like off ones that you just got to deal with too. Like pray. I'm going to pray about it. Like that's something you got to be prepared to overcome. But those are like the 3 main buckets that LOs run into. And you just got to have something to prepare yourself for and have an objection waiting. So I think that's important. But look, it's very easy to isolate those things up front. So like, for example, how would you isolate that? Like, here's how I would isolate those 3 up front. So if I'm isolating wait or think, a few things I'm doing. Number 1, I'm saying today, the entire phone call. Today. We're going to get you pre-approved today so that you can send in your documents today, get you verified approval so you can go shop this weekend, which is super exciting.
Do you think that potentially talking about today would make people a bit apprehensive or scare them a little bit?
Good. Here's the thing. I know that I'm going to provide them so much value. I know where the marketplace is. I'm going to push them into today. And I'm not being pushy. I'm just being educational and letting them know that this is a business call. A lot of times folks forget that it's a business call. This isn't just that we're not just two people hanging out. I'm not trying to waste your time, and I'm sure as hell not trying to waste mine. And that's with all due respect. So I'm going to say today, and I want the tire kickers, the people that are apprehensive.
You want to weed them out.
I'm good, man. I'm
Yeah.
all set. There's 7 billion people in the world. There's 330 million people here. There's 100 million people looking for a house or is a homeowner. I'm trying to connect with those folks. So I'd say today quite a bit from a wait and think standpoint. I would throw a couple soft closes in there or ask them to do a few things like, hey, can you send me in your W-2 and pay stub? You'll know really quick if they're serious about it and they're going to do it today or they're going to give you some wait or think. You'll get that up front from an isolating objection standpoint. Ask simple questions like, hey, just out of curiosity, would you rather have an appraisal on the weekend or weekday? And just throwing those open-ended questions or those questions in general at that client is going to see if they're serious or not. And that should isolate a little bit more. The other thing is you got to build urgency based off the marketplace. I had a podcast we did, but you got to bring the heat, man. You have to let the client know the marketplace moves.
Right.
Whether they want to wait or not. And you got to do it from the jump.
Right.
Not at the end. So there's two ways to do it. You could say, well, the marketplace, I can't tell you, dude. I cannot tell you how many times I've heard this, and it's never worked ever. Ready? Client says, I want to wait. And then the banker goes, the loan officer goes, well, you should want to wait because the marketplace is going to change tomorrow. And if the rates go up, then your payment goes up and everything goes up. No one ever, clients never been like, oh my God, you're so right. Let me move forward. Like no one's ever said that. But if you've ingrained into the client that the market is on the move, and just like a beach ball, when you push that beach ball down in the pool, what happens when you let go?
Back up, right.
It comes back up. We just saw that. That's a real thing. And the market moves without you. We have an X factor in the industry. And it happens to be the marketplace and no one can control. So you let the client know that if we find something today, I'm going to ask for your business. That's what it's all about. I'd like to lock you in today and get you into a position where you can get this home for you and your family, or you can, pay off all this credit cards or so on and so forth for you and your family. So it has to be from the jump. It can't be post-close. It has to be literally right from the start. So today, ask those questions, ultimately see what they're buying prowess is, so to speak, and then ultimately just have urgency with inside of the marketplace right off the front.
Right.
So that's how I'd isolate wait. Isolating shopping's unique because you can't really do it. People are going to shop where they aren't, but I'm going to show them so much value that they don't want to go anywhere else. So I'm going to talk about a personal brand and who I am, how long I've been in the marketplace, how fast I can do this, so on and so forth. I'm going to show them that. From a branding standpoint, personal branding, I'm going to brand myself and my company as much as I possibly can. I'm going to take my time with the client because the reality is this: if you pre-approve somebody or you do a refi in 15 minutes, wouldn't you be inclined to go spend another 15 minutes with somebody else?
Right.
If you spend 45 minutes to an hour and you actually have a great conversation, and they feel like your best friend after,
you're less likely to hop on the phone with someone else.
I don't want to go spend look, the reality, look, dude, clients don't want to talk to mortgage guys and gals. Okay. You're not that cool. We're not that cool. We're finance people. We're boring. Some people. And they don't want to go talk to a bunch of folks. They don't want to spend their afternoon on a Saturday talking to 15 people. They want somebody that can get the damn job done.
Right.
So when you provide that much value with the client, you take a little bit longer. That obviously helps. And I think just like we were talking about earlier, showing them a couple different options and what's in their best interest has always helped me isolate the shopping objection. Being unbelievably confident, not only in your power to get the job done, but your product, meaning rate cost combinations, the lenders that you work with, the lender that you work for, is really important too. People feed off that confidence. And then if I'm isolating a other person, so to speak, or a spouse, we have to pull credit in our industry. Okay? Typically, if you're making a decision on something, you're on that credit report.
Right.
Does that make sense?
Uh-huh.
So at that point, or if I'm talking about an application or credit, I simply just ask the client, hey, is there anybody else? I don't want to be rude on stepping on any toes. I want to be respectful of your decision-making process. Is there anybody else that I should add on the credit that's going to be in this decision? Is there anybody else that I should add onto the loan application that's going to be in your decision-making process? And that's going to tell me right then. Because the reality is, if they say no, and then you go to close on them after you pulled credit or after you've said that, they say, well, I need to talk with my wife. I need to talk with my business partner. Alex, I completely hear you. You and I just spoke about this. You said that you didn't want to add anybody to your decision.
We have the same version of that. I tell people all the time, ask if they're the decision maker on the call.
Yeah.
Like at the beginning of the call.
Yeah.
Right? At the beginning of the call, it's so important because then if they do say, hey, I need to talk to my wife about it, it's like, well, you just said you were the decision maker, man. What's up?
Yeah.
What's going on? Is that it? And a lot of the objections that you get aren't even the real objection.
Correct. You got to uncover what they really are.
Right.
And that's through literally just kind of like sifting through and asking questions to kind of see what the real objection is. And I think too many inexperienced loan officers or inexperienced salespeople just take whatever face value, objection, or question or obstacle there is, and they don't get to the real root.
Right.
So they'll say like, I don't know, something like the market's going to move, and the client's like, okay, cool. I'm still going to think about it. But in our reality, the client is getting another phone call and has an appointment with a different loan officer in 15 minutes, and they're just getting off the phone call with you and saying they're going to wait. Why? Because they're shopping.
Right.
See what I'm saying? They're
right.
saying they're going to wait because they want to hurt your feelings. Just give me a night to sleep on. You'll never hear from them again, by the way.
Right.
And they're just taking another phone call. It's crazy that, in my true opinion, there's only one objection, and that's value. And I know it sounds weird, but
no, it's 100% accurate.
It's value.
They just don't see
it
the
comes
value
back to
too.
shopping. You could say it's shopping. That'd be the one true objection, but it's value. You don't need to talk with your significant other, spouse, business partner if you've provided so much value, and they've already talked.
Right.
You don't think that a man and a woman or whatever it is, right? Like, let's not get into that. You don't think that a spouse, they've not talked about a refi or a purchase. You don't think that a business partner, if we are business partners and you put your information online for our business,
that you're not going to know
that
about
we're
it.
not going to know about it?
Right.
No, you haven't provided enough value. You don't think that if you've isolated wait and think so much, and you provided so much urgency within the marketplace, so much value as a human being, said today a bunch, that the client's going to just say, I'm going to wait. And no, it's not about wait. They are going to shop. You haven't provided enough value for them to move forward. And the same thing with shopping, man. So I think it all comes down to value. But in a perfect world, you got to isolate those objections. And if you can isolate them, your chances of writing more loans, your chances of helping more clients, which is what we really are doing, right? We're helping clients, goes up tenfold because you haven't skipped steps.
Yeah, and you're stopping being an order taker.
Yeah, for sure.
Right.
Which a lot of people are right now.
A lot of people are order takers right now. And, we've heard some calls being sent in, and they're just, it's like, what's your credit? What's your loan amount? It's like,
It's exhausting.
What are you doing?
It's because they're not in it for the right
And we
reasons.
also already get those answers for them. So I'm like, why are you asking those questions when you could be using this time to build some rapport and create a relationship, right? Because you don't only want, when people look at a sale, they look at it, or a loan, they look at it as a singular deal.
Yeah.
If they were to look at it as not a singular deal, but this is a multiple deal, meaning like, if I get this person to like me, because somebody's going to buy from you, they have to like you,
Trust you,
know who you
respect
are,
you.
and trust you, right? So your mentality shouldn't be like, all right, I'm going to close this loan. Your mentality should be, I'm going to close this loan, and I'm also going to get her mother to close with me. I'm going to get her family, her cousins, or whoever it is, right? And when you switch your mentality about that, it's only going to help you make that single sale.
Yeah.
It's only going to help.
And that's
People
even
don't think that far ahead.
It's even in your industry right now. Like, you don't understand. Like, I made a post about it the other day, but this broker community is so close. And if you provide value and so much so that someone goes on board with Lincrest and you knock out of the park with them, we're all connected, man. I talk to other broker owners every day.
Yeah.
I mean, like, we're texting each other. We're talking about creating a mortgage brokerage mastermind where we can
Right.
help these business owners like crush it because of our training and the things that we've been through over the past decade.
Right.
Like we talk all the time. So yeah, you help one brokerage, you help Kinfolk, and yeah, I'm going to talk to PJ Pinson over at fucking Supreme Home Lending. Yeah,
Right.
of course I am. Like, you
Right.
know what I'm saying? And say, hey, you should use them because I have. That's exactly what I've done.
Right.
So yeah, I mean, the end game is my job, and I've said this to all of the clients that I've helped so far in the last couple weeks, or every single phone call that I've had, every one without fail. My job is not just to wow you; it is to earn your business so much so that you send me friends and family.
Right.
The end game's a referral, not a sale.
Right. Right. And when you switch that mentality, it's just people don't understand how fruitful it is.
Yeah,
Because let's say they try it once and it doesn't work, then they just give up on it.
yeah.
Right.
People are spending. Yeah.
You need to keep chipping away at it.
Who do you know that owns a home that would benefit from a 5-minute free mortgage consultation from me? I don't know. You don't know anybody that owns a home? Yeah, you do. Come on, who?
Right.
That's it. That's literally how I ask for referrals. Or at the end of the day, like if it's for a purchase, who do you know that's, I mean, look, you're in the age, you're 28, 29 years old, super excited that we're getting this done for you. We just pre-approved you. I'm super excited we're going to get this house for you. Hopefully we get it, fingers crossed, competitive market. Who do you know that's also in the home buying process?
Right.
Oh, I don't know. Come on, you got friends and family. I mean, how many weddings have you been to at our age right now? I've been to 50,000 weddings over the past
And you
2
don't
years.
even you don't even need to get it just
Everyone's in the same life cycle. you
right,
know?
and you don't even need to get it just then. Like people, like
Sure.
the smallest things. Hey, what's your birthday? I got your birthday. All right, I'm going to send you a card. All right,
Yeah,
you can
man.
automate all. You can automate all of that, like or send them a birthday text, right?
Yeah.
All of a sudden, their friend needs to buy a home. Oh wow, actually, no, Cody. He just
You want to be
texted
top
me.
of mind.
Exactly.
Be top
Staying
of
top
mind.
of mind.
Because people go through, like I said, these life cycles. Most people only buy 1 or 2 homes in their entire life. It's
Right.
just the average folks. Now, people that are real estate investors and so on and so forth, that's
course.
a little bit different.
Yep.
But you want to be top of mind when people are at the dinner table and they want to say, yeah, I just refied. Yeah, I just purchased with Kinfolk. Yeah, I just, you know what I mean? That's, you want your company's name to be in their mouth 24/7. So
Right.
that's it's really important. But
Right, and you're doing a good job of that, buddy. You're
Thanks,
making a lot
man.
of content. I'm seeing it. I'm liking it.
more is more.
More, yeah, absolutely.
That
and,
simple.
And we're trying to be really good about content, dude. I have
Yeah.
a full-time video editor chopping up this episode. He's gonna have a lot of work to do for this episode.
Cut it.
Yeah, cutting a lot. You gave a lot of gems. So I think when we talk about things like overcoming objections,
Sure.
I think the important thing also to equip you for that is building
the sale.
building the sale, right?
Mm-hmm.
So how do you go about building the sale?
So I think that there's and this is all the stuff we're talking about. If you're listening, like this is for pros. Like if you're listening to this, you just got in the industry 2 years ago. You've been an order taker. You've made
You've just
6
been
figures.
doing only refinance if you got in the industry 2 years ago.
Exactly. But I'm saying like you've literally been sitting there for 2 years, like just answering phone calls and just like this isn't your gig. Like you're not going to understand what I'm talking about. But hopefully that you kind of transition into being a professional. It's all about trying to create want and need and finding true angles with the best interest of the client in mind and almost thinking of yourself as a fiduciary. So for example, a client will call in. This is how you build a sale. Client will call in and they're like, I want to lower my rate, right? I'm going to use refi as an example. And then what normal bankers do is they'll say, well, what's your current rate? And the client will say it's a 3.25. Are rates at 3.25, Alex? Rates are like 5%, right?
Mm-hmm.
Can you lower a 3.25 to 5%? No, it's the opposite. So instead of digging deep, having a conversation with the client, that's where the conversation ends. The reality is that client's calling in for a different reason. They have debt. They just spent 50 grand on their kid's wedding. They just gave tuition for their kid's school, which tuition's 50 grand a year now, whatever it is, right?
It's crazy.
So there's a reason they were at the gym with their friend Bob, and Bob just said, hey, I just refied and took the cash out that I had and paid off all my debt and put a gazebo in the backyard. And then they go home, they put their information online. See what I'm saying? There's a reason. It's
Right.
not just to lower the rate. The client is saying they want to lower the rate because that is one of their goals. However, they have other goals. So then when you pull up a copy of credit and when you go through their finances, you understand, and you go through their assets and so on and so forth, you understand that they need a full-blown, mindset switch, hack, reset of how to look at their finances. And that's where you come into play. So you build that sale based off the information that you get. And they want it.
And people aren't expecting that either.
Right.
Which is awesome. People are not expecting to get
financial advice.
Financial advice. Like they're expecting, advice on
Right.
purchasing a home or refinancing.
Yeah.
But not specific financial advice.
Yeah.
And I think if you can provide a lot of value that way, it's a pleasant surprise for them, right? They're going to trust you more.
They came in looking for a blue suit and they leave with a pinstripe gray one.
Right.
They still look great.
Yep.
They just, the blue looks shitty on their skin. You know what I mean? They have a gray one. So I think that's one thing. The other thing is we have to look at, as lenders, we have to understand and look at lending as if it was our own money. And what I mean by that is if you had a 590 FICO or a 620 FICO and you were living paycheck to paycheck and I was personally lending you money and I knew all that stuff about you, do you think the interest rate would be higher or lower? Higher.
Higher.
Would I even lend you money? Probably not.
Right.
My point is, if you don't have the credentials and the client needs to understand that their shit stinks, for lack of a better phrase, right?
Right.
And building doubt or pedestaling the client are two ways to build a sale. And the reality of our industry is there's a lot of overlays in underwriting. And there's pass fails like DTI, under 50%, over 50% on conventional loan products, right? Like it's pass fail. FICOs, it needs to be over a certain or under a certain. And there's different programs and so on and so forth. But your client needs to know that, hey, you're at a 642. The low is 620, the high is 840. Okay? You're on the lower end of that scale. It is going to be harder, Alex, to get you into a home than it would be if someone was at 815. Now, I mean that with all due respect. I'm not trying to beat you up, right? What did that do to you? That built doubt in your mind. Now, can you help them? Probably, hopefully, but you're speaking nothing but the truth and just being candid and building doubt in your client's mind. And when you're building that type of sale, it becomes much easier to close on.
Oh yeah, people want what they can't have.
Correct. And it's just the truth. You're not being facetious, you're not lying. It is much harder to qualify somebody at 640 than it is at 820. Right. It's just, it is what it is. So that's something that we've done for a long time. Now, look, I think there's other loan officers that do it the wrong way and that are lying to clients. And that is the wrong thing to do. Like if you're doing that, get out of the industry. You're making everybody look bad, saying things like, you got a 680. Like, I don't even know if I can help you, man. Your credit's bad. Like, that's really bad. And I've heard people do that. Or you haven't been at your job for 2 years. Like, I can't help you with your income. Your income's not sufficient. That's not true. Fannie Mae and Freddie Mac, you just need a damn full-time job with a pay stub and a W-2. They really don't care. FHA, they look at different things. But needless to say, there's bad ways to build out and there's good ways to build out. It's important that the client understands what it's going to take to get them qualified. It's really important too. So that'd be kind of building doubt or building the sell that way. And then the opposite, and by the way, on the building doubt side, you always let the client know something up front that maybe is disadvantageous. And then it's called a hit, hug approach, is what I like to call them. Hit them with the truth and then hug them twice. So, hey, your credit's at 642. It's not the best, not the worst, but ultimately it's going to be harder to get you qualified. Good news is income's great, right? We're going to pass with flying colors there. And you got quite a bit of money in the bank, which is sweet. You just have a low FICO. Like, let's do what we can do. So that's, you don't want to like just
100%.
And then there's pedestaling clients. And I think that, your brokers will love this, but there's so many clients that come in hot thinking that they are just God's gift to earth. They're like, yeah, what can you do for me? I got a 780 FICO. What's your rate right now? Well, hold on, champ. Okay? Hold on, bud. Where like you get in pissing contests with clients. I've literally said that. I'm like, I'm not here to get in a pissing contest with you. You know what I mean? You make in 1 year what I make in 2 months. I've literally said that to a client. I was like, so why don't we start off on a different foot? Oh my gosh. Right? Because clients come in hot and it's really annoying. And
we have conversations like that.
Yeah.
I it's crazy. And, for my clients that are listening to this, I love you guys. And I am blessed because I have 135 of the best mortgage brokers in the country.
Yeah.
Self-proclaimed.
Yeah.
Right? Everybody that we got on a call with, they're like,
best.
"Oh, I'm the best mortgage broker in,
Florida,
New Jersey, or
Yeah.
I'm the number one mortgage broker in Florida, or I'm the best." And one time, and this was early on in my career, this was years ago, but I got on a call. This is when I was still doing sales, so it was years ago, and I got on a call. And by the way, this is sales for my company. This is when we were just starting out. I would do all the sales. Now I have sales guys.
Yeah, baby. I remember that, by the way.
Yeah.
You were I mean, dude, I remember that. And I remember when you first started adding on folks, I was like, this is going to be a thing. Anyways.
Yeah. So I got on a call with this guy, and I'm getting ready to present to him because we do demos. And he goes, "Hold it right there." He goes, "I don't want to hear any of this." He goes, "I'll ask you the questions. I'm going to be asking the questions.
I'm going
here.
to drive.
I'm the number one mortgage broker in the country. You should be honored to work with me, blah, blah, blah." I go, "All right." And when we're sharing screen, so I pull up Google and I type in his name and I press enter. He goes, "What are you doing?" I go, "Well, usually when you're..."
Oh, I love this so much.
When you're the best at something, like, you'll be easy to find on Google. And then I delete his name and I type in my name and I'm like this. I press enter. New York Weekly, 40 under 40.
Yeah.
Entrepreneur Magazine, 40 under 40 is just all of this, just
Yeah.
like hundreds of articles.
Sure.
And he was just like,
We just sit.
"Okay, I guess we can do the presentation now."
Well, it's just, you got to sit clients, and this is just in sales in general. Sometimes you got to sit people down.
Yeah.
You got to sit them down. You know what I mean? And it's like, and it's no disrespect.
No.
But there's a tussle. There's a flocking of feathers. This is in our DNA.
Yep.
To be competitive and to flex, or whatever you want to call it, have that sort of conflict, and like you're in a match where you're trying to get one leg up on each other, and that happens in our industry, man. With brokers, it's like the clients come in, they think they're God's gift to earth, and that we should be basically giving them a 1.5% for free. And most of those clients are like 740 FICO, make $100,000 a year, and have 15 grand in the bank.
Right.
Right. So that's not, no. So I say pedestal very lightly, because I'm only going to pedestal people that are like creme de la creme, 835 FICO, have $1 million in the bank, 4 different properties. Yeah. I'm going to let you know
Right.
up front, I'm going to take care of you. And that's the pedestal. Like I'm looking for those types of clients, and it's a really easy conversation. So I showed you the building doubt. The pedestal is the same thing. Like, look, all I like to do, Alex, is I love dealing with, hanging out with, taking care of A-paper clients.
Right.
And you happen to be an A-paper client. Okay. So you have a great credit score, you have great income. Like, you're literally exactly who I'm looking for. The reason why I like working with you is because you like to get things done quick, the right way. You have all your information. So I just want to say, first and foremost, before we even get started, I appreciate you, and I'm excited to work with you. And I just want you to know that with how busy you are and how successful you are, shopping for a mortgage, I'm sure, is the last thing that you need or want to be doing. So my job is to get you the best damn deal in the market,
Let me do that for you.
so that you can get on with your day. So I'm
Right.
going to take care of you. And that's pedestaling, right? And
Right.
it's about how you make people feel. And like I said, with building doubt, you get a little healthy anxiety, because you're like, damn, my credit score isn't that good. I'm like a little nervous about it. Like, damn, Cody's right. So it gives them a little healthy anxiety. And people buy on emotion. Anxiety is emotion. And then the flip side of that is, when you're pedestaling a client, you make them feel like $1 billion.
Yeah.
Like they're the best thing ever. You're
Yep.
going to take care of them. You're their friend.
Yep.
So that's another emotion that comes through. So anyways, that's how I would build the sale. Again, they come in from a blue suit, or they come in looking for a blue suit. You give them a silver one, meaning, yeah, if they're coming for one thing, you got to have their best interest in mind, not what's going to get you paid more. That's
Right.
not the thing. You got to be a fiduciary and say, like, look, I know you wanted X, but this is why. And this option Y is way better for you. And here is why, right? Why that option's better.
Right.
Pedestal, building doubt, those types of things. Those things matter, and definitely will help your loan officers close more deals. And all you're doing is just being candid upfront with the client and evoking and pushing on a little bit of emotion. you know?
Right.
So that's what I say about that.
Pedestaling.
Pedestal.
Yeah. I got to try that out. I don't do too much. I don't do too much of that. just because it's hard to choose. Everyone's the best loan officer in the country. You don't know which ones to pedestal. No, we have some good relationships with a couple of companies, and if you're an organization, what happens usually is they'll start out with something like a gold package, and then they'll upgrade it, and then they'll upgrade again, and again, and they're like, hey, I got a branch over here, and again and again and again. So, fostering those relationships has been great for us. And I think, pretty soon we're probably, there's different ways to grow.
Yeah. Scalability.
Right. We talk about total achievable market. Well, really, there's only 500,000 maybe, right? Brokers in the country. And,
Beautiful
so
life.
When you're looking at scaling, it's like, well, we could just go to individual brokers. But I think what we're going to do is we're going to go up market. So up market is, instead of selling to individual brokers, what we're going to do is we're just going to sell to organizations and companies. And I think for us, it's much easier because it's less clients to manage, right? Instead, you're just dealing with one point of contact. And, typically, hopefully, we're sticky enough and people get used to our systems to where it's too much of a pain in the ass to go anywhere else, right?
Sure.
And, that's what we're focusing on. One of the things that we're going to do.
I got a question about that.
Yeah.
So when you're talking about upmarket, and this is, we haven't talked about this. This is just, I'm just thinking, and this is just my entrepreneur mind. And as entrepreneurs, we're a little bit pessimistic. Aren't we all? I mean, kind of. We're optimistic for sure in our grandiose ideas, vision, and what we want our companies to be. But we're also pessimistic and we see all sides of things. When you're going upmarket like that, and I'm just thinking about like the company I used to work for. Like we would just insource it, meaning like we would just create a team that sets appointments and calls out on these leads and transfers them live right to the brokerage. And a lot of companies actually kind of have that. So when you're going upstream like that, what's the difference between those folks and you guys? You know what I'm saying? I'm just throwing that out there.
Great question. So one, the difference is you're not going to have to pay all their salaries.
Yeah, that's true.
That's a huge difference. The other thing is all of our follow-up systems are proprietary.
Gotcha.
The other thing is we're actually in the process where it's almost finished, where we are building out our own software.
Nice.
That is completely, it's so sick. It's like, it's going to be incredible.
Cool. Is it like a lead housing
so
CRM or something? Or?
Yeah. So what we're doing
yeah.
is we're also going to get into, as you know, the real estate industry. Mm-hmm. So what we'd like to do to improve our service is we would like to have all of our mortgage brokers, right? And have realtors match up with the loan officer.
Love that.
So what's going to happen is you will literally be able to see on a map when we set an appointment for a mortgage broker, right? We'll set an appointment, a map will come up, and it will show you every single realtor within a 25-mile radius. So what we're going to do is we're going to take that lead, hand it to the realtor. Now, the realtor, all the leads for the realtor, and when you sign up with us, we're going to make this exclusive.
Symbiotic, exclusive, synergistic relationship.
Right. So it's like, hey, you're looking for a realtor, we will hook you up with a realtor. But any of our leads, you have to share with the realtor. And any of the leads that we give to the realtor, he has to share with you. So now we'll be able to actually guarantee deals for both sides, for both the loan officer and the realtor. We'll be able to guarantee them business. So when this software drops, and it should be literally in about 2 months, we're going to be able to do that. And we're literally going to be opening up our total achievable market tenfold because there's so many realtors in the US, right? And we're partnering up with some of the, I don't want to mention their name, but like some of the biggest and the best are doing a pilot with us right now to test out my theory and to see if this works, right?
Yeah.
Because if it does work, we will be the only marketing company that can actually legitimately say, hey, here is our system, here's our process. By the way, we're going to guarantee you deals to get your return on your investment because we have realtor partners that we're going to hook you up with and vice versa. Mm-hmm. And guess what? They just signed an exclusivity deal with us. So all their deals, they're coming to you, right? But you got to do me a favor. you got to make all your deals come to this realtor.
Yeah, and it's cool that you're going to be able to vet them too. So like the vetting process is important. Just like I said, these realtor calls.
Right.
So like I obviously you're opening up a whole different marketplace, a whole different clientele, and it's cool. I just thought about this, and I'm sure you're going to do this, but I mean, I would. Like if you're a real estate agent, you want to show up as a top performer, or you have the companies that you're talking about, your clients say they're the best of the best. Well, put your money where your mouth is. And what I mean by that is like you want to have partnered up on either side. You want to be the top person on either side to get partnered up. Well, you might pay a little bit more to get on the top of that screen.
100%.
If that makes sense.
Right. 100%. And I think, being able to guarantee closed loans is just like so unheard of. I mean, no, it's definitely not unheard of because
It's not unheard of, but it's not legitimized.
it's not legitimate.
You
It's
have
not
other
legit.
companies
These
that-
people
I
are full
know
of
you're-
crap.
yeah.
Right. There's marketing. Oh, I guarantee you a closed
It's
loan.
stupid.
Read the fine print. It's over the course of 6 months.
Yeah.
Or it's over the course of a year where we guarantee a closed loan. So
You're not talking about like Zale, right? I'm kidding. I know I'm not going to throw your competitors under the bus. I know you never would because you're a gentleman and a scholar, but I will. So I
Yeah.
think it's funny.
and well, by the way, they're not a competitor. They're like
I know.
1/25 of the
Yeah.
size of us.
You
They're,
know what I mean?
I'm sure they're good guys. I think they're actually in Arizona.
Nice.
Yeah, I
It's a
think.
mortgage mecca, man. I mean, you could Google, do yourself a favor. Google mortgage brokers near me and just go
Oh.
to maps.
Oh yeah, there's gonna be so
A
many.
house here. There's a. Damn, I didn't know my next door neighbor was a mortgage broker on the side. There's one. Like you throw a rock every single way, every
Right.
single direction, you find one. Anyways,
Right.
in Scottsdale.
No, you're absolutely right. And I was actually talking to Robbie about this the other day. There's so many. I think there's a hierarchy in mortgage lead gen, and there's the big guys. There's tier one. There's
LMB,
Zillow,
Lower My Bills, Free
Realtor,
Rate Update.
all those guys, right? Then there's
CoreLogic. I think.
then there's
Core Digital. Sorry.
then there's us. Mm-hmm. And I'm talking about as far as like revenue, like size, right? And then there's everybody else. Like, I'm not going to
Middle market, yeah.
Zell's one of them. But like, there's all these other companies that are, just like people don't even realize. Like, there's kids, man. They're kids working out of their house. Like, they don't even have an office.
Yeah.
And I love that. Like, that's where I came from.
Yeah, man.
I was just working out of my apartment, And now we're in a 5-bedroom with a pool, right? But now we got this magnificent office.
Let me upgrade you.
Yeah. But it took years.
Correct.
And I
Yeah,
think what's even more impressive is that we did this in a refinance market as a home purchase company.
Yeah, that's cool. You're right. I didn't tell you about this. This is a quick story, not to digress. One of your competitors, but only does refi. You only do purchase. They knew you, obviously. I talked to the CEO, and I was like, he's my boy. And they completely dropped the ball. I mean, I literally gave them my credit card information. It was all refi, and that's my world, and it was fairly cheap. And I was like, let's just try it out.
Right.
So we get to we did the whole presentation. This is probably like a month ago. Did the whole presentation. I'm like, sweet, you're going to send me X amount of appointments, 6 to 12 per month. This is what the ad spend looks like. This is how much it is. This is all this other stuff. I said, cool. I gave them, of course, a way to, look, as salespeople, you always give other salespeople objections to see how they handle it.
Mm-hmm.
I gave him the weight, and he fumbled it. And then I called him the next day, and I said, hey, I'm ready to go. Let's get this moving. It's like, cool, I'm going to set you up with my CEO. Da, 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 da. So it's one of the sales guys. I said, all right, cool. And then he starts asking me questions. Imagine this. I gave him my credit card information for like $2,500. And he starts asking me questions like, what was the name of your company again? What was your last name? And I'm like, I know that he's not like going to search for it or whatever the case is, or maybe he had a technology. I'm not sure. I'm trying to give him the benefit of the doubt. And then he goes, this was the kicker, and this is where I snapped, to be honest. And I said, fuck off. I'm not doing this with you. He goes, you're in the reverse mortgage space, right?
What?
And I was like, are you kidding me, man? You have a CEO of a company that's about to hand you over money that is going to be hiring loan officers and growing rapidly.
You're going to have to tell me this off air. What company it is.
I won't tell the
But
company.
I imagine it's a small company because the
Dude.
CEO got on the phone with you.
And then he called me.
I don't get on the phone.
He called me and he's like, yo, because I said, dude, have your fucking boss call me. I cannot believe that you just dropped the ball on this. I was like, this is embarrassing. I don't know if you're having an off day, but this pissed me off. And it's not an ego thing. It's just like, you didn't even have the right information and I'm about to give you money. Like, this just blew my mind. So the CEO finally calls me. We had a good conversation. I said, look, dude, I appreciate you. I think you're a good dude. I like your company. I think it's cool. I don't know if he was having an off day, but I'm just all set, dude. I'm all set because I can go for refi leads. I could pay $28 for a shared lead. These are the loans that I've written. $28
Right.
for a shared lead.
Uh-huh.
And it's shared between 4 or 5 other people. And I'm going to stand out against them with all due respect. I don't give a shit who it is.
Right, you're confident about the competition.
So like I made $28 in the loan that I wrote. I made $10,000. So that return on investment is what? 10,000x, whatever. I don't know what it is, but you know what I'm saying? So anyways, I'll tell you what it off there. Anyways, dude, it was crazy. But that speaking of that, that's presentations, right? And presenting and stuff like that, which is what we want to talk about. And there's a couple different presentations that loan officers that you guys make, I'm sure, but the loan officers, that's why we're here, Conversion Academy, that they can make. And there's a couple different things that they can do. First and foremost, if you've done the right things up front, presentation becomes a formality. You're just going over the option with them,
right,
and then letting them know what you need from them to get the process started.
Right.
And that's where you want to get to. There's a couple different presentation styles that I personally like or that I would like to share with you guys and the viewers.
Please do.
One is very, very simple. The first thing is always be ready and prepared for a presentation. Always have your presentation written out. These are just rules of thumb. Have it written out on a blank sheet of paper exactly how you want it. I use an old school T-chart, just it is what it is. Here's your old option, here's your new option, or if it's purchase, here's your renting option. If you stay in the same place, here's what your new option looks like with this new house. And you want to make sure that the client grabs a pen and paper and they're going through it with you. So you wrote it out for yourself, but you're also writing it out so that the client can also write it out. So you'd say things like on the left-hand side, write old option. Underneath that, put 30-year fix, which is what you're in now currently, right? Yes. Right. You're in a 5.99% currently, right? Yes. And you go through and you say, like, write that down on the right-hand side. And you go through and have it written down, because what I found is that if a client writes these options out with you, it's much easier for them to make an easy decision, because people are not only auditory learners, they're visual learners, they're kinesthetic learners. And you hit all three. You're telling them what it is. Visually, they're looking at it. And 3, they're kinesthetically writing out what their new option is going to be. So I think that's really important. That's something I've always leveraged and used. That's free of charge. I'm just kidding. But that's something that I've always used. And then I think it's important to transition to close, meaning something like, obviously, this loan makes a ton of financial sense. Let's go ahead and move forward. Or I know you've been waiting to purchase this home. This is the perfect loan for you and your family. And then you ultimately close. And there's a couple different, I guess, ways to close. There's the hard close sacrifice, which sometimes you got to do it. Honestly, with like bulls or clients that are like in your face, I love doing it. It's like a sacrifice. Do you want to put a debit or credit card? Which one? Which one are we going with? Like, kind of hard close them. There's a soft close. You say things like, do you want this emailed to you? You want me to text it over the link or whatever the case is? Or do you want me to, like, who's your homeowner's insurance? Can I, do you want your appraisal? I said this earlier, appraisal on the weekend or weekday. Those are like soft closes. Those are nice. There's fullback, halfback, which is something that I like to do from a presentation standpoint. You know your client's a little hard-headed, so you show them the halfback presentation, meaning here's this loan option. I know you're going to say no to it, and maybe it's a full buy down.
Yep.
It's super expensive. And they're like, no, Alex, I'm not doing that. I'm all set. So you're like, I knew you were going to say that. So that's why I have this option as well.
Right.
So it's a halfback, fullback, whichever one gets you to the goal line. Who gives a shit? And toss it back from the halfback, fullback. I played fullback. Anyways, so there's that one. Then my favorite's the slot close. If you are presenting a loan option and your client understands there's a range of interest rates, the lower you go, the more expensive, and vice versa, and you show them 2 different options within inside of that range, accomplishing all their goals, the client has something called the power of choice. And when you're choosing to buy something rather than being sold something, it typically sticks with you a lot longer, and you don't have buyer's remorse, which clients have. So there, here's a 399 with 20 grand in costs, and here is a 4.75 with 8. The payments are this, the costs are this, the loan option's this, whatever it might be. Which one do you think makes the most sense? And they choose.
Right. Right.
And whatever they say, you say, that's exactly what I was thinking.
Yeah.
Just to reinforce their buying power, reinforce their decision. What I found with the slot close, and this is just, again, just some things, are when you hang up the phone with your client and they're sending you documentation to get the loan into process, they're still getting phone calls. You don't think there's somebody that's fairly just as good as you on the other end of the phone calling them? They are. What I found, though, is that the client will answer the phone and say, well, hey, the client will say, hey, I'm going with Cody and Kim Folk Home Loans, or I'm going with Rocket Mortgage, I'm going with Loan Depot, I'm going with this person. And the other loan officer will say, well, what rate are they giving you? What are they giving you? And clients, instead of saying they're giving me a 3.9, and the loan officer saying, well, I can beat that, I can help you, like that's crazy. Instead of doing that, the client typically says, I appreciate that, but Cody's already gone through all the options with me. I know this is the best for my friends and my family and my decision because he went through that whole thing with me. I already know there's lower rates. I already know there's higher rates. I'm sure you can undercut them by $500, but it doesn't matter to me. Thank you so much. I'm all set.
Right.
That's what I found with the slot close. So there's a couple of ways to present. Like I said, I think having things written out is important so they can learn with you. And then having a game plan on how you're going to close and what type of presentation style you're going to have is super important.
And does that change and vary based on, I guess, the profile of the customer or of the prospect?
Yeah, for sure. Because there's clients that you don't want to give. Like, I'm not going to slot close somebody that's doesn't know their ass from a hole in the wall, so to speak. And what I mean that's again, with all due respect, I'm just being candid. Like, there's clients where if you give them a couple options, you know what they're going to do? They're going to wait. I don't know, man. This is too much. Right? Because people that aren't well-versed in math in general, they just aren't. So, yeah, I think clients that are maybe a simpler folk, I'm probably just giving one option and closing and just, that's just what I'm doing. Somebody that's financially savvy, maybe I give them two and have them, defer between the two and slot close or halfback, fullback. If you know your client's going to be hard-headed, you do the halfback, fullback. Say, hey, here's this. I don't want that. Okay, well, I thought you were going to say that. I had your best interest in mind. Here's this other one.
Right.
It defers on client for sure.
Yeah.
Financial profile, all that kind of stuff. So, and then you got to close, man. People are scared to close. I don't know why. Because you didn't waste all that time talking to a client for 30, 40, 50 minutes, 3 weeks, 4 months, whatever it might be for a purchase. And then you don't have the goal or gusto, the cojones, to ask for their business.
Right.
Closed mouths don't get fed. It's very simple.
Yep. Absolutely right about that.
Like, they're not going to just jump out of their seat and say, please, yes, take my money. Yes, here, I want to do the loan. Like, no, that's not how it works, man.
Right.
You have to ask for their business. They want you to ask for their business. The client deserves you to ask for their business. You know what I mean?
Yep.
And it's all for naught if you don't, in my opinion. And bankers are just, and loan officers are just scared. They're just scared they're going to get a no. They're scared they're going to put all this work in. You're going to get no anyways. Like, I don't know. I think that, and there's so many different schools of thought with closing and all that kind of stuff, but I'm a firm believer in asking for business.
Yep. Oh, 100%. What's the point of even being on the phone if you're not going to do that?
Yeah. Like,
right?
I'm going to ask you for your business at this point. Would you like to move forward, yes or no? Or would you like to put this on a debit or credit card or whatever your close is, whatever it is in your industry or whatever it might be? Like, ask, because the answer is always no if you don't. So you might as well ask.
Exactly.
Damn, throw a Hail Mary, do something.
Exactly. And you should be expecting no's anyway. Mm-hmm. So it really, you just got to get used to that.
Yeah. And then be prepared for the objection that you're going to get or the question. And you said it earlier, and I want to touch on it because I think it's important. Like, you're going to get a question. Don't mistake a question for an objection. People fumble and get all nervous.
Right.
Client says, what are the closing costs? That is a question. That's not an objection. Make sense? Like, What's the interest rate again? What's the term of the loan? How much do I have to put down? Those are questions.
Right.
Those aren't objections. So treat them as such. How do you treat questions? You give them an answer. What are the closing costs? $9,900. Do you want to put a debit or credit card for the appraisal?
Yep. There it is.
You just answer it. and you move on. What happens is loan officers fumble that. Well, the closing costs are $9,900, but they're rolled into the mortgage, and you don't have to pay anything out of pocket, which is super nice, or whatever it is. Like they just go on this tangent, shut up, and just answer the question.
Right.
If it's an objection, you got to have something prepared and ready to go. Yeah, you got to have an overcoming of that objection, right? That you understand the objection, make sure it's the right one. You respond, you close again. Understand the objection. Is it really the objection that they actually have? You respond accordingly and relevantly, and then you close again.
Right.
So I think that ciphering between the two is important. Being cool, calm, collected in the pocket's important.
Of course.
Don't fumble. Don't get all scared. It's what you're there to do. I think those things are important too. I don't know, just riffing.
No, you're absolutely right. And too many times, I mean, we've listened to some phone calls for research and development and
R&D.
Yeah. And, some of these people, they do sound scared. They sound timid.
Yeah.
And it's almost like they're afraid. They're walking on eggshells. They don't want to scare the person away. Right.
Yeah.
They don't want to scare. And it's just like
Just holding their little egg.
Yeah.
Oh.
Yeah.
Scarcity mindset, man. Go for it. What are you waiting for? Mm-hmm. There's more clients.
People could hear confidence on the phone.
Yeah.
And the worst thing that could happen is who cares? You're never going to meet this person. You're never going to see them. You probably never cross paths with them. So who cares? Just go for it.
Yeah. Just go. Some rebuttals, I think. Just side note, and we can end it here, and it'll be fun. You just got to have a go-to. Like for mine, for weight, it's pretty simple. Just do fun, like a little role play. If you said I want to wait, I'd say something to the tune of, Alex, I hear you. I've been doing this a long time. Okay. And I know that if I put a loan option in front of you that's this damn good, there's one of two things going on in your mind. Either one, I've just completely missed the mark, completely not accomplishing your goals, and you absolutely hate it. That's one. Or two, you're interested in the loan option, you're just not sure about something. So which one is it?
Not sure about something.
Yeah, they're going to ask every single time. They're going to pick that because you made the former be so crazy and outlandish.
Right.
Okay. So just out of curiosity, do you feel comfortable with my company? Do you feel like you know enough about my company to make a decision to move forward with my company?
Sure, Cody, I like you. I like the company. Okay. I'm just not sure it's the right decision for me right now.
And you like me, right? So you trust me. We've had a good conversation. I feel like we're like friends. We like connected. We vibe. We're gonna do karate in the garage, right? Like it's sweet. So you're not sure. It has to be the loan. So what questions do you have about the loan? That way I can give you more information to make this decision.
Right.
And then the client, that's the real objection.
You're isolating the objection.
Right. And you go down that route and they say the closing costs are a little high. Okay, well, look, let's say if I could, I don't know if I can, if I took another $500 off the cost, is that something we can move forward on today?
Right.
And you close, right? Hormozy says this all the time. People don't need time to make a decision. They just need more information.
Right.
So shorten the time frame, right? Shorten the time frame, give them more information, get to the real root of the problem, and then close again.
100%.
So that's like my go-to, I think, for shopping. This time concept is important. So I'd say something to the tune of, hey, Alex, look, I understand you want to shop around. I get it. Like it's I don't know why, because it's not fun to talk to people like me. Ha, ha, ha. You got to have a good sales laugh in the sales game.
Sure.
Ha, ha, ha. But you and I can both agree on something. Time is the most valuable asset that we have.
Right.
Is that right? I mean, it's not money. You can't get more of it.
Right.
Can't turn it around. Can't go backwards. Like you and I can both agree.
Can't go backwards.
So I'm going to save you a lot of time by going with me, and time's the most valuable asset we have. I've already done the shopping for you. It's my job. My job is to get you the best damn deal on the marketplace. And what I'd hate for you to do is step over dollars to pick up pennies, going with somebody else that's not as good as I am, that's not going to close your loan as fast as I am, all because you wanted a penny pinch. You're just going to waste a bunch of time talking to other lenders. So let's go ahead and move forward. It's just the right thing to do. Did you want to put that debt on a debit or a credit card or whatever the case is? So I just leverage the time aspect and level with people, and it typically works. And the dollar over penny, it just resonates with people.
And it is, and for the viewers, it is okay to call people out.
Yeah.
It is okay to call people out. It's like, hey, man, you said you were the decision maker. Now you're telling me you need to speak to your wife. Like, it's okay to call people out.
Correct.
To remind them of the past conversations that you've had.
Yep, exactly. You said you're busy. Why the hell? You want to shop?
Yeah.
You said I've been trying to get a hold of you for weeks now. I can't even. You're busy now. You want to shop around. You're too busy for that. You're not shopping.
Right.
You're not. We're gonna move forward.
Right.
And clients love that. And the last thing, and then we'll wrap it up is spouse or other person. Man, look. It's very simple. It's like, Alex, look, at the end of the day, you told me that, that your wife wasn't in the decision-making process. However, assuming that she wasn't in the situation, hypothetically, right? She's not in the situation at all, would you be willing to move forward? And typically when you take that person out, if they say, yes, I would move forward, it's really a spousal.
Yeah.
And they have to go talk to him.
Right. But if they say no, it's something else.
It's something else, right? And that's what you really want to get down to. And that's the one true objection is spousal. Dude, there's no way that if you're going to make a decision and not tell Linz about it, there's no way.
Right.
No shot, right? So at the end of the day, you got to talk with her or she has to talk with him or whatever the case is. And if you've isolated the right way and you've asked that question, if they weren't in the decision-making process, would you move forward and they say yes? Then do you know that it's a true spousal? If not, you got to go somewhere else. So
right.
I don't know. Hopefully it helps.
I think it helps. I think our viewers probably got a lot out of this.
Good.
Especially talking about the market rates, some new weapons for their utility belt that they can throw out. So appreciate you, Cody.
Yeah,
appreciate you coming on, man. And we'll do this again real soon.
Yeah, appreciate you. Love you, buddy. Yep.
Love you too,
Bye.
bud.